Indeed, it will be, and we are getting very close to the end of our 12J final season. It feels a little bit like the last of the last when my football team, West Ham United, moved from Upton Park. There was a final game there where, of course, they beat Manchester United once in a blue moon, and that was the end of that. Now, 12J is getting very, very close to that period. Today, we are talking about 12 Cape. And we have three very special guests, Jaap, Chris and Hugo. Gents, can you switch your cameras on and switch your microphones on, please, so we can see you? There's Jaap du Toit, very well-known face, very recognizable person. Chris Derksen and Hugo Venter, both with 12 Cape. Jaap, I know you from too many years for both of us to even go back onto, but basically, as the co-founder of PSG with Yanni Mouton. How's Yanni doing, by the way?
Yanni is doing okay, Alec. First of all, good afternoon. Nice to talk to you again. But Yanni is mostly at home. He doesn't come to the office anymore. But mostly good. I'm still very close to him. But we mostly talk about the old days when he does get the time to chat, you know.
Well, it's we're going to hear a lot more about you and your rationale for going into 12 Cape, as well as from Chris and Hugo in the next hour. But before we kick off, I want to make absolutely sure that everybody can hear us. Now, if you have a look on your control panel, you'll see there is a button with a hand, kind of a high five. Please, would you click on that to, if you can hear me, just to make absolutely sure that all is well. So please just click on the high five. Make sure that that you can. Okay. Coming through. Thank you. Hands raised. Thank you very much. So you can obviously hear us. And then the second thing is that you will find a question mark on your control panel. That is for questions, obviously. So when you've got a question that you'd like to pose to our guests today, please click on that and just type it in the little box on questions. I'll pick them up and pose the questions to our panelists. So before we bring in Hugo and Chris and go into the presentation, Jaap, I'm really interested to find out how you got involved here in this 12J. We know that 12J is a fantastic tax incentive, incentive to invest in particular companies, because you can write off your full investment against tax in the year that you make your investment, which means this year. I think Hugo and Chris are going to be telling us that you can even gear up this investment as well. We had a conversation last week with a legal expert, tax expert, who explained that you can gear it up aggressively and then write back in future years the assessed loss that you make through a 12J investment. So there are lots of creative ways of looking at this. But perhaps from the outset, how did you, Jaap, get involved in 12K?
Yes, Alec, that's actually very interesting. About 4 years ago, I met these three chaps. I knew Francois van Zyl for a long time by then. But coincidentally, all three of them had come back at some stage from Europe after having spent their first years in finance. They spent over there, and we got talking about how to invest in South Africa. And I remember I mentioned to them that the one asset class that I do know that really acts as a rand hedge is the property section here at the Atlantic seaboard in Cape Town. Obviously, that's where I invested myself in residential property, and later on also in additional properties. And it's really the asset class that got me interested. But we also had a situation where there was this possibility of saving tax and delaying tax on capital gains, for instance. And we simply coupled these two and got the business going. I was one of the so-called angel investors at that stage, and I got more involved with this team and realized that this is a very special group of young people. And so the business grew from 2017, where we are now. We're in a situation where 12J might obviously stop at the end of the month, but that's simply one of the avenues to raise funds.
You say it might stop, Jaap. I don't think it might. It's going to stop. It's over. It is done.
Yes.
Unless there's some huge change of heart at Treasury, but they've announced that they're not renewing it. So this is really the last opportunity. But it's interesting to hear what you say. Even after 12J, there will be ways of continuing with this business or raising capital, even though, of course,
Yes.
it won't be as attractive as it is before the end of the month.
Correct. Because I think simply what will happen is we will change the way that we raise funds from more focusing on the retail side. We will start focusing more on the institutional side. And the reason for that, why it's attractive to both those sets of investors, is I think the asset class that we're encountering here. Keep in mind on the capital appreciation side, I think over the last 10 years, we're talking about 13-14% per annum, which is a neat return exceeding inflation over that period, hence a stable return. But also on the cash flow side, which is more the income that we create through the apart hotels, that kind of trade-off is where when the rand goes weaker, it actually becomes more popular for tourists to come to South Africa for obvious reasons. And I think obviously then on both sides, the capital and the income side, we have a very attractive investment, Alec.
Yeah, we forget in this time of COVID that Cape Town is a global center for tourists. People on a bucket list will have various parts of the world, which includes Cape Town, that they want to get to. So you're investing in the Atlantic seaboard in apart hotels, right in the middle of the tourism sector. Chris Derksen, maybe you can pick up the story from here and just explain why or how long it took for you guys to settle on this as a focus point, as a focus area.
Alec, thank you very much, and good afternoon to everyone. Yeah, so the starting point was definitely not 12J, although that obviously turned out to be a fantastic way in which to raise capital and a significant benefit to investors, which they get right up front. There are very few investments which anyone makes with post-tax capital, and your first sort of tax benefit or cash benefit is a 40% odd benefit. So the starting point was let's find things where you can compound over long periods. Compounding over long periods is where the real magic lies. We know that's what the investment gurus all over the world have proven. And if you want to do that, you must invest in a sector which I think has very long-term structural positive dynamics. Jaap's described the capital side of it, so I'll start with that. If you look on the capital side of it, we know that this Atlantic seaboard is limited. There's only so much of its supply is capped, but the demand for people to live there, I think, is pretty much uncapped. If you start with global population growth and you then look at inequality, or you look at wealthy people, the growth of wealthy people globally, that is not going to stop anytime soon. So on the capital growth side of it, I think we're on the right side of that equation over long periods. And then secondly, on the yield side, you know, that the fundamental question is, will people travel more or less in 5 years, 10 years, and 20 years? And I think there again, the answer is one in which we say, well, people will be traveling more. Cape Town is a favorite destination, even more so post-COVID, when people can work untethered and they can use Cape Town as that global remote working destination. We're already seeing a lot of guests up here doing that. And then finally, you couple that with the concept of an apart hotel, which has been the fastest growing international accommodation subsector globally. And that's why I think if you add all those things, we thought, here's a very nice, low risk or relatively low risk strategy, which can compound over medium to long periods.
Chris, you mentioned apart hotel. Just unpack that, please.
So before the Airbnb, the advent of Airbnb, we had normal hotels. Rooms got tinier and tinier and tinier to put up yields, but obviously your traveler has no other option. Airbnb came in and all of a sudden gave people the space again, which many people wanted. They wanted a place where they can make their own dinner and have a bit more space wherever they were. But the problem with the latter was that you did not always have security or certainty of the level of service you're going to have. How clean is it going to be? Is my landlord going to be there with a key when I turn up, etc., etc., etc. And that gave rise to what you call an apart hotel, where you have the space, you have the self-sufficiency, especially during COVID, but there's a 24-hour concierge, there's a restaurant, you can get order in, etc., etc. And it basically is a new genre of accommodation which sits between the traditional hotel and your Airbnb lodging.
Yes, it's well put there, or well explained. If I wanted to spend more time in Cape Town, I presume I'd go with a apart hotel rather than go to a hotel. It's a normal hotel. If I wanted to work and spend time there. Chris, is that the target market really?
That is absolutely the target market. However, I mean, you do get very short-term stays as well. People as far away as Durbanville who decide, hey, they want a weekend in Cape Town. And on that weekend in Cape Town, they want to bring their families. And it's lovely to be able to sit in the lounge and have great internet, have a reception, 24-hour concierge, but walk across the road, either go to a restaurant or get your food from the spa across the road and make a family weekend of it.
Hugo, from your perspective, maybe you've got, I know you've got some tricks up your sleeve that you're going to talk to us about today, about various options that investors could have. But what's the reaction been like so far on 12J, given that you guys have been going, as Jaap said earlier, since 2017? 12J just it seemed to take a heck of a long time to capture the imagination of the public, and of course now that it has, Treasury are doing away with it. But how's the reaction been from 12J investors to 12 Cape?
Yeah, I mean that's maybe a good point to unpack a bit, because in one of the previous with Jackie and a few other times here on BizNews, I've explained that I lived in the UK 17 years, and when I came back, I came across Section 12J as a option for an investor to use to reduce his taxable income. Now, this all originated from something in the UK called a venture capital trust, and it's been working there since 1995. They raise anything between £600 and £700 million every year. So it's very successful. And, if you look back at why was that ever brought in, it's an incentive for private money to get invested into smaller businesses and to create jobs. And South Africa used it in 2009 as an elegant way to really make the tax money used more efficiently and get appropriated to the correct investments through people that know what they're doing. I always use the example of what someone at Treasury told me. It's that when you pay your taxes, it goes to government. Some of it leaks slightly, some of it gets lost, and then the money that's left gets allocated to projects like the Stina Dairy Farm project, where the rest of that tax then completely disappears. So what they did was they said, why don't we actually find a solution that you incentivize someone to say, you know what, we want to create jobs in the hospitality sector, or back in the day, mining was a big focus as well. So what you do is you must set up a company that is that's got certain rules included in it. So it needs to be FSC regulated. There must be a key individual attached to it, and SARS is going to come and audit you and make sure that you comply to all the rules. For example, 80% of the money must be deployed. You must deploy it into different companies. You can't just deploy 100% into one company. At least 20% must be allocated to, or maximum to, one company. And the reality was then it goes through a group of people like 12 Cape that takes the money and they invest it in the industries that the government directs it to. So, for example, we really like the hospitality industry. We like the prime property location, one of the best in the world. I was lucky enough to travel through the world during my 17 years working at banking. And I know, and everyone that's been here would know, this competes with all, any location globally. The country itself has got this natural beauty that, it's not something that I made or you made. It is just something that South Africa's got naturally. It's one of the few countries where you can see the big five. So tourists are coming here naturally. So what I also found is when I came back is, South Africa undersells it slightly, because when you go to a hotel, we're not showing people what we've got. So our tagline of proudly local, world class, what does that mean? All our interiors, the artwork against the walls is local artists. The furniture is made locally here in Pardon Island. So we're really trying to show people the quality what you can get here in Africa, and that's where we started. So when I tell the story to investors, I try and tell them, on the front page, sometimes people think a tax is immediately, you're not going to worry about it, because some people call it a scheme. It's as if, am I now dodging tax in some form or not? And the next thing it says VCC, which stands for a venture capital company. So that means extremely high risk. Now, the first point is, this is a tax incentive, which I explained to you, and I think you would agree, is an incredibly clever way to take tax money and make sure it gets invested by people that know what they're doing, have had many experience, over many years of managing people's money, and they invest in projects where they are making sure that those projects are, good value and can get a good return for the investors. Basically, look after their money. And we thought that you mentioned earlier gearing. I mean, we actually don't gear at all. We believe the government is giving each investor free gearing by giving a percentage of that tax that they don't pay. That is a form of gearing, interest-free, that you get from the government. We're not going to add any gearing on top of that. So 12 Cape does not do any gearing. So investors like us for that as one reason. So I'll add a few reasons there. One is experienced team of people that have invested over many years. Someone like Jaap is, the chairman of the board. He brings good governance and experience for many years and helping us and advising us how to manage the risk and make sure that we comply to, all the oversight that's required. And then, what do we then do? Why do people like it? We invest in property, prime location. There's a lot of people that like that. They like the capital growth in that sector. A lot of people want to take their money overseas. We don't disagree with that theory. And the reason I take it overseas is because they worry about South Africa. They worry about currency. So the target market of a foreign tourist coming here, that's a currency hedge, as you pointed out. And ultimately, where are we investing in property? It's really in this Cape Town area where we think those tourists are going to come to. And now the model works. So previously when we started off, we had to show people CGI images of how we think this place is going to look. Now it's been up and running for 18 months. People have lived here, people have stayed here. A lot of investors come and stay here, use that discount we give them to come and have a look at how the investment is performing. You know, in our financials, you would have seen that during COVID last year, the hotel operation made a profit. We kept all our staff. You know, no one was let go. You know, and now our during that period, our occupancy level was 72%. Now this weekend we were
That's
94%.
incredible. That's incredible. Let's just pause there for a minute.
Yeah.
We've seen so many bad news stories from the hotel industry during COVID, where, well, the Hyatt Hotel in Rosebank, I was there over the weekend. They don't know if they're ever going to reopen it. Just down the road, Rosebank, Johannesburg, this is. Down the road, the Intercontinental is closed down again. No one knows when it will reopen. Holiday Inn was closed down for a year and it's just reopened but is limping along. How come you were able to have those kind of occupancy rates and also keep all your staff? What's the story? How?
I mean, in the beginning, we always thought the hotel model, like I think Chris explained, you know, the rooms got smaller and smaller to increase your yields. And, you know, in a big hotel, if you walk into any hotel, well, not now anymore, but you previously walked into a hotel, there is a guy standing outside the door, opening the door for you. Then you walk inside, there's a guy pushing a trolley along. And then there's another guy that, you know, he does something. You know, everywhere you go, you just see people. And, you know, it's always been a very, you know, it's had a high cost base to run a hotel. Included in that, you've got a massive building that you probably own with 300 rooms. So it's one big building that needs to get maintained all the time. And what we thought was there must be a way to make this more cost efficient and reduce these costs. So of course, you know, what we do is we don't own a big building. We own the individual title deeds of the apartments which we discussed. So we then, it's like a Lego building block. We add them all together and we end up with owning the whole building. So we have control of the building and we can manage that operation. Now, the amount of staff you need in our model is a fraction of the staff you need for a hotel model, because a lot of people actually sometimes want to, as Chris explained, you know, want to go across the road, go buy their stuff at Woolies and go to Tops, you know, get a nice bottle of South African red wine and sit there and enjoy themselves without having to use any hotel services. So there's no one really involved in the process other than the reception person checking you in and the person coming to clean your room tomorrow. So we figured out how to get that model working and that it is very efficient. So during lockdown, you know, we were not allowed to attach some of those hotel services. You know, so some of those people, we just said to them, we'll continue to pay you. You don't have to come in. And because we could easily calculate our cash flow forecast for the next year. We now can calculate our cost forecast for the next 5 years because we know exactly what's all the expenses. And we keep that at a level where it's manageable. So, of course, what you then do is you keep some of the cash that we receive in the money market account where it earns, you know, a bit of interest. And we manage the cash flows quite well so that if a disaster or something like this happened, I mean, we could never have imagined COVID happening, but we did imagine a winter in the Cape Town. And then, you know, in winter in Cape Town, we needed to know that occupancy is going to be lower, so we needed to manage that process. And then what happened was all the foreign tourists that stayed with us continued to stay with us. We have an American couple that have been staying with us for more than 9 months. You know, we had some of our investors that play sport overseas that couldn't get back overseas. So, you know, we invited them to come and stay with us. They stayed here for 2 months before they went back. And then other foreign tourists that were in town that stayed in a hotel realized, you see, I need a bigger space. And they came to book in and check in and stay here. And as Chris explained, you know, that people that want to break away for a weekend that can't go overseas, they started coming here. You know, and then you get a lot of people, guests that just want to get away for a night from the kids. You know, it's been tough sitting at home with your kids all day long, full time, and then they break away for a quick night away to come to Cape Town and, you know, go out for dinner, and that full 12 Cape or the Latitude Apart Hotel, which we would like to replicate and build more of them.
Excellent. Well, we have a number of questions, so I'd rather than disappoint people at the end, start going into those if we may. Just to remind you that I will not call you by your full name. In other words, not your first and last name and surname, just your first name and that's to preserve anonymity. It just works better for our community. Russell poses the first question, and he says, do investors get any preferential rates at 12J apart hotel accommodation? In other words, is there anything on top of your investment that is kicked back to you?
Oh yeah, I'll take that one. Yeah, so we got this question, and a lot of people do this. We get, they incentivize you by giving you bed nights, or you give them, a membership of some kind to make it attractive for you. What additional benefits are you getting on top of your investment? The answer is yes. We looked at that. As I mentioned, because we have, a lot of investors located overseas, for example, and we didn't like the bed-like route. The bed night route, it's always, people think you're going to get there to come and stay there, and then life happens and you can't get there. Maybe you can't fly, even you can't even fly internally and get here. So you always feel like you're losing out. And then, of course, there's one guy that always uses it. He's the winner. And it creates a bit of a conflict there for us. So we said, let's make it simple. Give our investor an additional 30% discount on the rate that is advertised, so that he can come and stay here. He can decide if he stays in a cheaper 1-bed, or he maybe wants to stay in the 3-bed, which is more expensive. He knows what he can afford, but everyone knows that there's a 30% discount attached to it. On an interesting thing that's happened, because some of the hotels and event spaces closed, we were approached by some members clubs in Johannesburg. There's one called the Mesh Club, and their members needed a place in Cape Town where they can come and sit and work when they come visit here. So there's co-working space for them and accommodation for them, and we have reciprocity. So, we were supposed to be in Joburg today. We would have been there in studio with yourself and then working this afternoon from the Mesh Club. Unfortunately, we made a decision because of COVID not to travel. But now a guy that checks into 12 Cape, becomes an investor in 12 Cape, gets a 30% discount. It becomes naturally part of a membership club, which gives him reciprocity to other places where he can sit together with other investors in that shared workspace.
Brilliant. Please go, Dries. Sorry, Dries is going to ask a question now. Chris?
No, I wanted to add to what Hugo said. I think, it was a very elegant solution for us to pass the scale benefits to the investors, but still keep it fair. So if a large multinational bank came to us and said, hey, can you do us a nice bulk package deal? You would have given them a very attractive rate in return for some volume at your hotels. And that's very much, we are passing that volume discount to our investors. And as Hugo said, 30% discount to rack rate at the moment is a good one. But the investors at least know that they're getting preferential treatment relative to the man in the street.
Excellent. Well, it's nice and simple and very appealing as well. Dries's question is, if our company must pay tax worth 5 million Rand and invest in this or any other venture capital company and gets a certificate and not pay tax to SARS, the investment is fixed for at least 5 years. The question is 5 million Rand. If he invests that amount into 12 Cape, does that mean that he can't take the 5 million Rand out for 5 years? Chris?
That is correct in theory. In practice, of course, he can approach us and say, what, I need a capital. And it's 3 years later, in which case the tax that was deducted. Entirely possible, but it's not really something we like to advertise, because we like our investors to have to be aligned to us with the same 5 years plus or longer investment horizon.
But the problem on that one, if you can come in, is if you do cash this in within 5 years, then SARS is going to want their money back as well.
Yeah, of course. I mean, the idea behind the incentive is that people would, keep the money invested in the business long enough for the company itself to deploy it and get into a point where it actually generates cash and money and you employ people. If someone just comes in today and you get the tax deduction and you walk away from it, that's not going to work. So like as Chris explains, is if you come in today and you make your investment, and in 3 years' time, you really need that money back, you will approach us and you'll ask for it. We will work with you to try and realize that investment for you. The only thing you need to do is put that same amount back into a tax return. SARS, on the front page of your tax return, it says, have you invested in a Section 12J company, yes or no? If you say yes, originally you put it in 5 million. The next question is, have you exited a Section 12J venture capital company? You say yes, and in 3 years' time, you'll fill in that second box to say that I've exited a Section 12J box. If it's within 5 years, it gets added back to your taxable income, and you get taxed fully on it. If it's after 5 years, or it becomes a capital gains tax, and that's the difference. I mean, you as a company still receive that deferred payment of tax of 3 years.
Okay, but you're going to have to pay that tax back. Russell's got a follow-up question, which is, what is the split between buying current properties and developing of new apart hotels in the current plan?
Yeah, so currently we have the Latitude Apart Hotel that we have in place immediately, and then our capital we raise will go towards new opportunities. We have a long list of opportunities that we've looked at over the last year. Because on 26th February this year, the sunset clause was announced, what we decided to do is not to pull the trigger on any of the new opportunities, but focus on raising the capital till the end of June, and then we would look at how much capital we've raised before we make that decision. Now, it's important for us to look at what is the capital we raise, because as I said before, we don't gear. So I'm not going to go to the bank and say, lend me the money to make the next investment. So once we get to end of June, we will then review what capital we've received, and then we'll look at the opportunities that we have already have on our list, and then we'll prioritize them in terms of what can we afford. After that, we'll look at what is the do a refresh of the current yields that we're expecting there on those assets. And the one thing we do not do is we don't take development risk. So although there's a lot of developers that we've spoken to, we won't take that development risk that a lot of people take. I mean, we like to be on the lower end of taking risk. So when once a developer, we can go into that transaction now to say we will take the offtake from you once you completed the development, and then we will kit it and make it a Latitude style building and services we attach to it. So what we have not done is like a lot of other 12Js is identify a current development that's being built, and then we're going to go and say, okay, fine, we're going to put all the money into that building. That co-development risk for us is just one step too far. We want to really try and keep this on at the low risk end. So an investor that comes in is going to have exposure to the Latitude Apart Hotel that's already operating and working, and then you will also get exposure to the next investment that we make.
Jaap, maybe you can come in here, because this is a really conservative approach. We've seen many of the other 12Js, including our business partners that we're exposing through this project, who are offering gearing, who are obviously as confident as you are about their business model and about their business plan. But what motivated you to go this conservative route? What was your thinking from a strategic perspective?
Yes, Alec, I think from an investment point of view, I've always been told not to try and borrow money to invest long term, because at some stage you might feel that you have to realize assets that are not at the opportune time. So what we decided as a board of the fund is that the maximum that we would be able to borrow is 15%, and that will only be in cases where we need some bridging or whatever the situation might be. But I think something that one must realize with a fund that we are running here is that we have created a kind of asset, the apart hotel concept, which is modular in its application. So you can buy units in addition, as funds are raised, you buy an additional unit, 2 units, 20 units. But also in the case where our questioner earlier asked, if we want to raise liquidity again in the fund, it's much easier to sell off 2 or 3 or 10 units, because each of these units actually becomes a retail unit for practical purposes in this area. And I think that's where hotel fund groups were really caught unaware, because you can imagine if you have to raise liquidity in a fund like that, you actually have to sell a whole hotel. You can't sell floors in hotels. It's one unit, and that modularity that we've created there, I think, is something that we are going to be expanding going forward with the institutional model as well. Anyway, I hope that answers your question.
No, it does, and it also reminds me of when I started my little business, MoneyWeb, in 1997, early days of the internet. My philosophy was growth will take care of itself. The internet's going to grow, so just be conservative, just be profitable, just make sure you're not roadkill. That was really the perspective. But don't overgear. Make sure you made money every month. And in this case, it appears to me that you're getting in because of 12J at a very, very attractive approach. Just keep it conservative. Just make sure you don't overgear and you're not roadkill. And I like your modular approach. If you do need to raise capital for whatever reason, or if you hit a cash flow issue, there it is. You sell one apartment of many. Very interesting, and I think that'll be very appealing to conservative investors. And what other kind of investors should there be? Okay, we got a lot of questions to go through, guys.
Alec,
so I'm going to stop my questions. But, yeah, you can, but quickly, Chris. We got plenty of questions. I'm going to be shouted at otherwise.
Okay. No. I mean, if you target risk return as opposed to just return, it makes a lot of sense to build a conservative fund if your initial benefit is so big that you're getting 8.5 over 5 years or 45 up front. Then it makes a lot of sense in terms of a risk return trade-off to make your fund a conservative one. Yeah,
I get it, and I think anyone listening to this is gonna fully appreciate that as well. Here's from GH or GH. The first one is, how might the rundown of the 12J scheme impact resale values and activities? Chris, do you want to pick up on this one?
Yeah, that's something that's been mentioned before. We built this whole fund on a very in-depth demand-supply analysis of Cape Town. So we know how many tourists come, we know how many of them are local, we know how long they're going to stay. They're going to stay a bit longer now because of COVID. We know how many Airbnb rooms there are, we know how many flats there are, and how many hotel rooms there are. If you put all of that together, you still end up in a deficit situation in 5 years' time. Mm-hmm. We know of every single 12J funded development in Cape Town right now. There's quite a few of them, but I don't think it's meaningful relative to the total supply, and it's not something I think will have a major impact given the broader supply-demand deficit in the medium to long term.
GH has a follow-up question. He says, how saturated is the Cape Town apart hotel market? there's already been quite a few that have been in existence for a long time. So you've done your research on this one, Chris, and you say there's going to be a shortage when you take a 5-year view.
Yes, that would be my view, and that view would be based on very fundamental, in-depth analysis. But let's just take where we are today. So a lot of saturation in the apartheid hotel model in Cape Town. Despite that, despite COVID, despite the winter, we are, I don't know, this weekend we're probably 80% occupied, something like that. And that in itself must tell you something about the current positioning of apartheid hotel saturation in the market.
Russell's got another follow-up question. What is the estimated fees, bottom line, the percentage reduction in investment, net IRR, as per current plan and excluding tax concession? So I think you said earlier the tax is about 8.5% a year for the next 5 years. Outside of that, Hugo, you want to pick this up?
Yeah, there's a lot of questions, but I'll
bottom line it for us. I think that's really what Russell's trying to get to.
Yeah, exactly. So what we are targeting now is, quite simple. There's 3 things. We exclude the tax. So, I can't tell every guy what is his tax numbers. What is his effective tax rate. So I'm going to exclude that. The 2 main drivers really of return is going to be your yield, your running yield that you get from the operations of the hotel, and number 2 is going to be your capital appreciation over time. Now, capital appreciation, let me start there, has been more than 10% per year for the last 10 years until COVID arrived. So we have historically never told anyone, your yield is going to be, your capital appreciation is going to be anywhere near that level. We've said it's going to be inflation plus 1. So back when we started the fund, that was roughly 6%. It's now a bit lower than that. And we're sticking with that analysis. We actually thought historically always that what we really want to do is protect your capital. It's as if you gave me R1 million, you put it under the mattress and look after it and don't lose it. We think the area we've invested into does exactly that. And it will preserve it. So even now, when COVID market is down quite a lot, the revaluations that took place in the area we're in did not drop as much as the rest of the country. Then the next one is on the dividend yield. So dividend yield is between 3 and 5% that we're targeting. But again, that is now when we start, as we started, and we have already paid a dividend last year. We didn't pay a dividend this year because we just held on to the cash in case of cash flow requirements and working capital. If there's another 3rd or 4th wave or something even worse that we don't foresee right now. But that number, of course, we believe is going to increase over time. So Chris and myself and Jaap, when we invested, was to take a 20, 30-year view. I want my kids to earn dividends. And, we think that growth will happen in dividends of 10% a year. And we will eventually end up at a 10% yield. When that date is, I can't really tell you, but that is currently our targets. So inflation plus 1 for capital growth, 3 to 5% dividends on the running yield.
And then the 8.5 that you can add for the tax as well. So it's a very appealing investment, helped along by 12J. Gerry's question is, would the panel explain how the exit strategy works should an investor want to get out in the future? I think maybe if you could do it in 2 ways. The first way would be in 5 years' time when which is the minimum term that the revenue authorities wanted the period to last for. And then the other one would be if you hit some kind of a crisis and need to do it earlier.
Yeah, what we've done is, there's various ways to do this. One thing, that some people tell you that we definitely do not do, we do not guarantee that exit for you, because it's something that we've learned, Chris and myself and Jaap, over many years of working in banking and running our own businesses, is that a guarantor is a fool with a pen. I mean, that guy is if anyone really believes in that strategy, then they must go and pick those guys. We're not guaranteeing any exit. What we do is we tell you exactly what is our strategy going to be. So we do keep some cash. We're allowed to keep up to 20% of the NAV of the fund in a money market account. So we're not going to put 20%. We're going to keep 10% is the target in a money market account for cash and liquidity purposes, for if an investor wants to exit, or we have some other emergencies that we need to tend to. So if someone comes to us now, a 500,000 investment, I at the moment would review it, and we would potentially exit that person. I mean, once you get to call it year 5, the first year 5, which comes up, that was our own money that we invested. I know for a fact we're not exiting, so that's going to pass. The next year will be from the first people that we raise capital from. So when they start exiting, how are we going to pay them off? Either I have that cash available in current money market account, or what I have is I do not have any gearing today. So I could approach shareholders and add gearing to the fund if that is acceptable at that point. If that doesn't happen, I can actually go and say, okay, fine, now maybe I have to exit some of my underlying assets. So I can go and look in the portfolio of what we own. Maybe there's 1 or 2 units, 1 bed flat in the corner there above the school, and the guests don't like the kids screaming in the mornings when they're trying to sleep. And we sell that unit. 1 and 2 bedroom apartments trade every single day here in the target area, in Sea Point area. It might be a case where the market is slightly down and you'll exit it at a 5 or 10% below your initial investment, but it sells, because remember, it's those individual Lego blocks. Then, of course, a fourth option is, depending on what size we get to over time, we have investigated and we can list the fund as a REIT. We've spoken to the JSE and ZARX, and both of them have made it very attractive for 12J funds to list their portfolio. That is another option. And of course, what we are now doing is, after sunset doors, is we are in discussions already with institutional investors. We will set up another fund that want to co-invest into this apart hotel model of us. Now that fund is going to be attracting tickets of 100 million, 200 million, and that fund over time will want to buy those assets from the 12J investors, as it just moves from the 12J fund to the institutional fund within the 12K group.
Oh, well put. And there are many options, as you've just explained. I guess as we look into the future. Yeah, Jaap.
Yes,
listing. I like that one.
You would imagine that I would prefer that listing route. I mean, that's something that's proven over time for liquidity, and it offers a fair price to both buyers and sellers. So I think you would agree with that.
And it is getting a lot easier with more competition now amongst the stock exchanges. It's
correct.
I know a nice. I'm sworn to secrecy, so I can't actually let the cat out the bag here. But I could see this being a very, very attractive listing for a opportunity that we'll see coming out, I think, in the next few weeks. Anyway, there are lots of what you've said is that there's lots of ways of skinning that cat. And I guess the one thing you've got to realize, though, as an investor, is if you do go out within 5 years, you pay the tax back, and that's not negotiable. I really don't know how many of these questions we're going to get through, but please, perhaps we can try and whip through them now, because we only have 10 minutes left. Dries has got a follow-up question. He says, if the venture capital company and or project goes bust after, say, 3 years, is SARS going to claim the tax that we invested from us so that we lose the investment and have to pay the tax? What's the downside of all of this, Jaap, if it does go bust?
So I imagine he is referring to the fund going totally south, and you lose all your investments. Is that the assumption that we're making here?
That's what he's asking. Is if 12 Cape
Okay.
goes bankrupt?
Yeah, that's like, remember, it's a fund. It's like a unit trust fund. The value is in are in the assets. So it's really the assets that have to go to naught. There's no situation where the business can go insolvent. This is eventually it boils down to the asset values. That has never happened, but I would imagine in a doomsday situation, that could be true. And the tax man has got his pound of flesh that he wants. So yes, it's possibly true, but most unlikely.
Maybe I'll just add to that, as Jaap says. So, what would be left that in the company is obviously the properties that we own. Your investment that you make in a fund, SARS is not going to come to you and tell you you need to pay the tax back. Your investment, call it, you put in R1 million, you got 450,000 cash back. That's in your pocket. You got that deduction. So you own the shares in 12 Cape. What happens is your shares in 12 Cape goes to zero in that scenario. I mean, I would be surprised if properties in the area we invest in goes to zero, but let's say it does. Then the companies, you've lost that that R1 million will be zero, but you still have that tax that you got back. The SARS is not going to go back to you and say that you have to now pay back that money as well.
Yeah, no, it's pretty clear on all of those. The liabilities are very unlikely to ever exceed assets in a company like this because of the way that you've structured it. And his final question, apologies, let's go on to Leslie. Leslie asks, not sure whether I missed it, but what is the minimum investment?
I'll answer that one as well. And so the interesting thing is, if you look at minimum investment, you look at at what stage does this tax incentive really start benefiting people? It really benefits people that gets into the higher tax brackets. And for that reason, we've made our minimum investment 250,000. I'm quickly going to use this opportunity to talk about our deferred payment option as well, because the end of June is quite close, and a lot of people are asking us, they don't necessarily have the cash ready now to make this investment. And you'll see if you're there on page 5, you can have that on the screen. You actually, what we've done is that an investor needs to give us 10% end of June of the amount that they want to invest. They're going to get that certificate for us. I'm going to use the R1 million example again. So you you commit to make an investment of R1 million before the end of June. You have to pay us R100,000, or at least a minimum. If you commit at least 100,000, even if it's less than R1 million, by the end of June. Then you pay a further 30% by the end of February 2022 towards your investment, and the final balance you pay 28 February 2023. That just gives people that cash flow opportunities. So the minimum investment remains 250, because we believe that a person must earn at least enough money for them to really get the 12J benefit. But the payment structure would put you in a situation where end of June, the minimum that you need to invest would be R100,000, and then you can pay the balances over time. What we also don't do is we don't charge any interest on it. We have no intention of joining the credit regulator and be licensed. We are not in that business. This is not our experience. What we're really trying to do here is find a solution for people to manage that cash flows. People have not earned their full taxable income for the year. So they would not have enough money to invest. That allows them to come in. We have, some people that get bonuses towards the end of the year that would normally go towards a type of investment like this. This allows them to pay us at a time when it suits them. So we're not lending any money to anyone. We are giving you a full share certificate. You get a full deduction. If at the end of the period you do not pay us the outstanding balance, still you owe us R100,000. What we'll do is we'll cancel those shares, and we will report back to SARS and inform them that you've exited 12 Cape to the value of 100,000 Rand, and you have to then put it back into your tax return.
All right, so the deferred payment option. We've only got 4 minutes left, so I'm going to try and pick the best of the questions. Harry just wanted an update, and maybe, Chris, you can pick up on this one, about that exit. He said, what happens after 5 years? How much money do you get back? What occurs at that period, Chris?
I'll do
if
the
you
one
want to
liner.
get out.
You let us know with ample time. Give us a notice period. You let us know. We value the portfolio, and you are exited at the value of the portfolio, i.e., an external valuator has a look at the portfolio values. You know your portion of 12 Cape is worth R1 million, and that is the value at which you're exited.
Jana asked the question as well on the deferred option, and there it is on the screen now, Jana. And I think it was very well explained by Hugo. So if you want to go back and watch the recording of this video, I think you'll get all the information you have. Craig wants to know, how many years have you been raising funds under 12J? Hugo?
That's since 2017, is it?
Yeah, so we set up the company on 13 September 2017. During that period, Chris and myself, did the necessary exams as follow-ups to our experience to become the key individuals and added into, on the fund. That 28 February 2018, the partners in the business made the first investment up to 30 million Rand to fund the business, and then we spent the next 12 months to build relationship with the distribution partners. We are happy if you know that people like BizNews and other boutique wealth firms would did a due diligence on us, and then went to their clients and marketed the fund on our behalf. So we raised our first external raise was in February 2019, and of course we raised in February 2020 as well, and here we are now at the final raise, and hopefully there is going to be people taking the opportunity.
Sorry, Chris.
No, one liner. In case the question was about our general fund management experience. So Hugo's been raising funds and investing them for about 20 years before, and the same year, institutional level, and Jaap even longer.
Kier's question, which is going to be the last one today, the minimum investment amount, it's worth just repeating that, please. If I understand you correctly, Hugo, you said 250,000 on the deferred payment option. Does that mean you only have to put in 25,000 as a 10%, or is there a minimum of 100?
A minimum of 100. I mean, like I say, the overall, eventually, 250,000 is the minimum investment that you would be making. But through the deferred payment option, you could pay 100,000 now, and the rest at a later date.
Craig, I hope you're happy with that answer as well. His question was about the cash flow. So let's just say you are going in for the minimum amount of 250,000. You put your 100,000 Rand down now before the end of June. How long is it going to take to get the paperwork done, given that you almost want to have a final deadline, because you can't come up on the 29th of June and say, please guys, can you do a deal for us? I guess that's not going to be easy.
You can actually. The only thing that you need to sign by that date is, the subscription agreement. The subscription agreement is very straightforward. This is the normal FICA information, address, everything else. You need to tell us how much you want to invest. And if you select the payment option, it's another, 2 or 3 pages, and it really, what you see there on screen, it summarizes that in legal words, just to make sure that you understand what you are doing and signing up to. And then, you would pay the minimum amount of investment. But in theory, I mean, the turnaround of this process, it can be 2 or 3 hours. I mean, the thing that delays slightly depends on the FICA documentation. So Prescient is our external fund administrator. They've been doing this for us since inception, and they do this across the market for lots of hedge funds and asset managers. They're very well experienced and normally help us to streamline this process. And we can do this for you in a couple of hours.
All right. So this is one of the 12 J's that you can walk into on the 30th of June and say, Griet, I've got to get this thing done quickly. Okay.
Yeah.
Lovely seeing you again, guys. Jaap du Toit, wonderful having you on this webinar. It really has been a great privilege to have known you for so many years and to have seen the impact you've made and the wealth you've created for many people. And I'm sure from what you've told us today, you're going to be doing the same for the 12 Cape investors. Chris and Hugo, thank you also. It's been lovely being your partner, and I hope that you guys don't get completely run off your feet in the next couple of weeks. But it is the end, isn't it? It's like a race. It's the last 100 meters. You just got to kick on here, and no matter what it takes.
And well done to you, Alec, for building out such a interesting modern media house. We're following you closely.
Thank you, Jaap. Wonderful. Well, thanks everybody for attending the webinar today. We will be back again next Monday for I think we've only got 2 more webinars to go in the whole of the series, and it's been such a privilege and such a pleasure to be fielding the questions. I'm delighted to see that we managed to get through all of the questions today, and I'm sure that if you are watching this video and we have exponentially more people watch the video than attend it live, I'm sure that all the questions that you had would have been answered here as well. Until the next time, from our team here at BizNews, cheerio.
Thank you.
Keep well.
Thank you very much.
Thank you for joining us for this webinar, which is compiled and produced by the